Welcome back, my friends. Kava Group made its public market debut on the New York Stock Exchange under the ticker KAVA. The company sold 14.4 million shares, raising nearly $318 million and valuing the restaurant chain at roughly $2.45 billion. Kava's debut could inspire other restaurant chains to follow its lead, helping to snap the IPO market's drought. Surf Air, a regional air travel and electric aviation company, plans to IPO through a direct listing later this summer. What does it mean for the economy? And what does it mean for the future of the United States? But before we get into all of that, please press the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. And before we continue, a word from the sponsor of this video. Today's sponsor is InnerLife.com, creator of the InnerLife STS system. InnerLife STS is a cloud mobile platform for mental health care and its integration with primary medical care. InnerLife STS is designed for assessment, data collection and analytics, documentation, and progress tracking. InnerLife STS creates and composes conceptualized narratives and builds them into professional-grade reports. These reports are designed for use by mental health professionals, primary care physicians, justice system professionals and universities and include mental health assessment reports, mental health treatment reports, and treatment progress reports. And InnerLife STS uses doctor-selected pseudonames for all patients. So, only the healthcare professional knows the patient identity. Mediterranean restaurant chain KAVA opens at $42 per share in market debut, after pricing IPO at $22. The parent company of Mediterranean restaurant chain KAVA started trading Thursday morning. Kava Group priced its IPO at $22 per share on Wednesday, above the expected range of $19 to $20. KAVA sold 14.4 million shares, raising nearly $318 million and valuing the restaurant chain at roughly $2.45 billion. The stock trades on the New York Stock Exchange under the ticker symbol KAVA. Although it was founded in 2006, KAVA opened its first fast casual location in 2011, modeling its build-your-own Mediterranean meals after the formula made popular by Chipotle Mexican Grill. The chain built a customer base by introducing some eaters to ingredients like harissa and tahini and positioning itself as a healthy and convenient option. The company also sells its dips, spreads and salad dressings in grocery stores. KAVA acquired Zoe's Kitchen in 2018, taking the rival Mediterranean chain private for $300 million. It's spent the last 5 years converting Zoe's Kitchen locations into KAVA restaurants, contributing to its footprint of 263 locations as of April 16. Last year, KAVA's net sales climbed to $564.1 million, 12.8% higher than the year earlier. You're seeing the inflection point in the business, and all of that robust structure we've invested in, the restaurant growth, starting to take hold and drive tailwinds to the business, CEO Brett Schulman said. But its losses also widened from $37.4 million in 2021 to $59 million in 2022. Still, industry experts say that the chain has demonstrated a clear path to profitability, making it more attractive for investors looking for growth stocks. In the first quarter, it reported a net loss of $2.1 million, narrower than its $20 million net loss in the year-ago period. The restaurant company plans to use the proceeds from its IPO for new location openings and general corporate purposes. KAVA adds to the growing number of publicly traded fast casual chains. Sector leader Chipotle made its public market debut back in 2006 and has seen its market value grow to $56.9 billion. More recently, salad chain Sweetgreen went public in November 2021. It now has a market value of $1.2 billion. Investors have dinged the stock for the company's lack of profit, although shares have climbed more than 25% this year. KAVA's debut could inspire other restaurant chains to follow its lead, helping to snap the IPO market's drought. Brazilian steakhouse Fogo de Chão and Korean barbecue chain General Restaurant Group have both filed regulatory paperwork confidentially, while both Panera Bread and Fat Brands Twin Peaks have shared an intent to issue an initial public offering in the near future. Surf Air Mobility has also filed for an initial public offering. Surf Air, a regional air travel and electric aviation company, plans to go public through a direct listing later this summer, according to filings with the Securities and Exchange Commission. Using Cessna Grand Caravans as its aircraft fleet, Surf Air offers scheduled and private flights. The company is also merging with Southern Airways Express, which flew more than 400,000 customers last year, according to the SEC filings. And these are not the only companies looking to go public. SoftBank Group Corporation's ARM is in talks with some of its biggest customers and end users about bringing on one or more anchor investors in the chip designer's initial public offering, IPO, two sources familiar with the matter said. ARM is talking to at least 10 companies, including some pretty big names: Intel, Alphabet, Apple, Microsoft, Taiwan Semiconductor, and Samsung Electronics. They could have potential participation in the IPO, one of the sources said. What do we know about the ARM IPO? SoftBank Group is expected to list its ARM Limited segment at some point this year 2023. The exact timing of the IPO will be determined by market conditions. The company has selected 4 investment banks to lead the listing: Goldman Sachs, JP Morgan Chase, Barclays, and Mizuho Financial Group. It's said the ARM IPO will take place in the US, and is likely to confidentially submit paperwork in April. The US listing will come as a disappointment to UK ministers who had continually been lobbying the company to list on the London Stock Exchange, in a bid to secure London as an appealing destination for high-value IPOs. ARM previously had a dual-listed firm in London and New York, until it was bought by SoftBank in 2016 and delisted. In 2020, SoftBank announced it would be selling ARM to US chipmaker Nvidia, but the $80 billion sale fell through in February 2022 after numerous governments cited competition issues. The decision to list ARM instead will likely not be as profitable as its sale to Nvidia would have been, especially given the turbulent time tech stocks have been having on public markets, rising interest rates and changing monetary policy. The company is seeking an IPO because private investors in the SoftBank-led Vision Fund, who own 25% of ARM, will be able to cash in through an IPO. ARM also wants to be able to give stock options as incentives to employees. Should the ARM IPO go ahead, it's likely to be one of the highest profile floats in recent years and could provide a much-needed boost to the IPO market. And semiconductor manufacturing is coming back to the United States in a big way. Samsung says it's adding capacity in Taylor, Texas, which is northeast of Austin, because of US demand. More than 90% of advanced chips are currently made in Taiwan. Over the last 3 decades, the US share of global chip production has plummeted from 37% to just 12%. That's largely because estimates show it costs at least 20% more to build and operate a new fab in the US than in Asia, where labor is cheaper, the supply chain is more accessible and government incentives are far greater. Chip manufacturing will also get cheaper in the US if more companies in the supply chain expand domestically. Intel is building big new fabs in Arizona, Ohio and Europe. TSMC is spending $40 billion on new chip fabs in Arizona. Of the $17 billion total price tag for Samsung's Taylor fab, $11 billion is going to machinery and equipment. That investment includes chip building machines made by Applied Materials, which just announced a $4 billion semiconductor facility in Silicon Valley, the biggest the region has seen in decades. For Samsung's Texas expansion, environmental concerns are big and growing. The highest price pieces of equipment Samsung will bring into Taylor are probably the $200 million EUV lithography machines made by ASML. They are the only devices in the world that can etch with enough precision for the most advanced chips. Each EUV machine is rated to consume about 1 megawatt of electricity, which is 10% more than the previous generation. One study found Samsung used more than 20% of South Korea's entire solar and wind power capacity in 2020. Texas's energy grid is largely cut off from its neighbors, limiting its borrowing power across state lines. In 2021, that grid failed during an extreme winter storm, leaving millions of Texans without power and causing at least 57 deaths. There seems to be a flurry of new investment in semiconductors these days. A blockbuster profit report Wednesday from Nvidia crystallized an important point for both markets and the economy. For better or worse, artificial intelligence is the future. Whether it's personalized shopping, self-driving cars or a broad array of robotics uses for healthcare, gaming and finance, AI will become a factor in virtually everyone's lives. Nvidia's massive fiscal first quarter earnings helped quantify the phenomenon as the firm nears an elite cast of tech leaders with $1 trillion market valuations and clear leadership status both on Wall Street and in Silicon Valley. Some of the changes Blitz foresees are reduced demand for foreign labor, at point of sale, effect where coding and creative writing can be done by machines instead of people in a host of other activities that go beyond what appears obvious now. Development of products such as OpenAI's ChatGPT, a chatbot that converses with the user, has helped bring home the potential. For Nvidia, the upside already has been apparent. As if profit of $1.09 a share on revenue of $7.19 billion, both well above Wall Street estimates, wasn't enough, the company guided it was expecting $11 billion in sales for the current quarter, largely driven by its leadership position in the AI chip supplying business. Shares soared more than 26% higher around midday Thursday, and the company's market value surpassed $950 billion. Initially, Nvidia focused on developing GPUs for gaming and consumer graphics applications. Their GPUs were highly regarded for their performance and became popular among gamers and computer enthusiasts. Over time, Nvidia expanded its product line to include GPUs for professional visualization, data center, and artificial intelligence (AI) applications. But what do you think? Please leave us a comment below and hit the like button. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.